Hey, good evening, folks. Chris here with Green Bar Trading, also known as Ghost of GBT on Reddit. Thanks for tuning in once again for a weekly charting and technical analysis video. I'm going to try to change things up a little bit this week just because we have a lot of results and we're trying to experiment and see if we can get some more better quality content out there and just see how we can change it to make it a little bit better, make the videos a little bit more concise and a little bit more focused. So I'm going to attempt to try to change this up, and we'll see how it goes. So let me know in the comments if you have feedback on how you like the new format. What I'm going to do tonight, instead of doing the top 10, is I'm going to go through them in the order of the top 10, but I'm only going to pick out the ones that I personally find to be somewhat valuable. So we're going to look at like Apple short, for example. I don't think there's any reason at all to short Apple. So I'm just going to kind of briefly go over that one. And anything that I just think is kind of like an instant yes or an instant no, I'm just going to go over real quickly. And then the other ones that I think are more interesting, we'll go over those in a little bit more detail. If you have questions about the reasons that I think something is just an instant yes or an instant no, then you can put that in the comments of the video as well, and I can answer via a comment back to you. But I'm thinking this might just make things a little bit better. It might make the videos a little bit more focused. So let me know what you think about the new format, and then if you don't like it, we can do something else. So that said, there were actually a lot of people that were that agreed with this Apple short analysis. I'm not sure why. I mean, honestly, I'm looking at this thing, I don't see any reason to short Apple. I mean, it's Apple. The S&P 500 is strong. It's breaking out to all-time highs. The NASDAQ is strong, ripping to all-time highs. There's no reason at all to short Apple. So, I mean, even if the market was weak, Apple short is only going to be really useful on like a day trade type of basis for me. Moving on to AMD. We've gone over AMD 100 times. So if you go back and watch some of the previous videos, you'll see that we talked about AMD and sort of the way that I trade this. So if you're interested in trading AMD, what I would do is just go back and watch some of the previous videos, because we talk about it just about every single week, and I always say pretty much the same thing. So it's all there. Just go back and watch the other videos for that one. QCOM. I did find Qualcomm to be a little bit interesting just because we have this Apple lawsuit against them, which I think is a little bit overblown. And then we had the earnings miss, which I also think the reaction to that was a little bit overblown. So I did find this long idea to be interesting on QCOM. So what I would watch for on QCOM is, so now that sort of the bad news is over, right? We've had the panic because of the Apple lawsuit, and we've had the panic because of the subpar earnings. So what I'd be watching for at this point is some kind of an indication of strength to indicate that the bottom is in, at least temporarily. And you can do that by looking at maybe a 15-minute or a 30-minute or possibly even a 60-minute chart. Looks like it seemed like there was a bottom in right after the Apple lawsuit, but then of course we had bad earnings, and so now we're forming a new bottom. So what I'd be watching for is to see if this 53.50 to 54 level holds. And if it does, then I think you might have a decent long on your hands. But it needs a setup. I mean, a lot of times these stocks will just take, a few days or maybe a week to sort of consolidate the move and set up a pattern on the chart so that you actually have like a low risk entry to buy it or sell it. So that's what I'd be watching for on QCOM. I do like the idea overall, though, for a long. I think both of these things, the bad earnings as well as the Apple lawsuit, is pretty overblown. And Qualcomm's a big company, so I don't think they're going anywhere anytime soon. I don't think that, this Apple lawsuit is really going to be that big of a deal. So I do like it. I would just be waiting for some sort of an indication of strength, like a strong green candle that takes out, the previous day's high or something along those lines. So there's Qualcomm. JNUG, I also found this one kind of interesting, only because it has a really clean pattern. I've been watching gold pretty consistently for the last month or so. I really like this sort of 915, 920 level on JNUG. So I'd be watching this to see when it comes over that, because this has been a significant resistance point dating all the way back into October of last year. So once it gets above 920, 930, then you're going to run into a little bit of resistance at $10 just because it's a round number. But aside from that, it's pretty much clear up into this 14 area. So I think we could see a real big run in gold. So if you're trading JNUG, that's fine. You might also want to look at Nugget, which is a very similar pattern. You might also want to look at GDX if you're more into like the lower leverage ETFs, like JNUG and Nugget are both leveraged ETFs. They're both triple leveraged. GDX is a little bit calmer. And so if you're not into the high volatility type stuff, then you could trade GDX, or you could look at any of the countless number of gold stocks that are out there. Just go to like finviz.com and hit the screener. And then you can set your industry on, well, you set your sector on basic materials and then gold. And there you go. There's all your charts. And you just scroll through and find something that looks like a pattern that you like. So I do think there's a potential run coming in gold, especially with all of the stuff that Trump is doing. You know, there's going to be some panic in the markets, and I think that gold is sort of a safe haven whenever that type of thing happens. So like the idea, there's a few different options that you can use to play it. Next up, Nokia. Skipping this one just because it's a foreign stock. It gaps all the time. It's just not really tradable. It doesn't have any range. It's just not really tradable. So we're going to skip over that one. BIOS, good trading stock. This is a high volatility, low float, biotechnology company. So I love the idea of trading it. I don't necessarily think that there's a pattern in it right now. What I like to see on these little beaten down biotech companies is when they come into this gap. We had this big gap on some sort of bad news, right, from $2.50 down to $1.75. So this gap eventually will fill most of the time, unless it gets more bad news in the interim of trying to get through it. But you can see it was attempting to get into that gap over here. So that's what I'd be watching for, is when it gets back up to this 175 area, I'd be watching to buy it there for a quick push into the mid twos. And that's what I would pay attention to. Right now, I don't see really any reason to buy it. I mean, you can see the volumes just kind of trickled away. There's no interest in it right now. But I can guarantee you when it gets back up towards 175 and gets near this gap, there's going to be interest in it again. You're going to see lots of volume pour in, just like we did over here when it was close and trying to get into that gap. So keep an eye on that one when it gets back up towards 175. What I'll usually do is just set an alert for like 160 or 165. And that way, whenever it hits there, I don't even have to have it on my watch list or anything. Whenever it hits there, it'll just send me an email or send me an SMS message or whatever your software allows. And there you go. You just put it on your watch list and off you go. Cisco. So normally I would say I don't really like Cisco just because it's got, a ton of shares in the float. It's kind of a slow moving stock. It doesn't really have that much range. It's a big, boring grandpa stock. However, I do like this pattern. I like the fact that it keeps testing $31. So that's what I'd be watching for. It had a strong close on Friday. So if it goes through $31, you're going to get a 50 or 75 cent move out of it, most likely, if it goes through with strong volume. Keep in mind, though, there wasn't really any volume expansion on the daily chart. So to me, that says this is just sort of normal oscillation for the chart. It's not necessarily like anything exciting. So I do think that there's a move in it over $31. You're going to probably have to have a bigger account to trade it and to make that move worth it. Otherwise, you're going to make $1 a share on, 100 shares. Maybe make $100 if you're lucky, if you've got a small account. Now, if you've got a $100,000 account or $500,000 account, and you can buy 10,000 shares of something like this, then it becomes much more worth it. Next up, First Solar. This was a short. It looks like the short's already over to me. Not necessarily over, but you missed the entry. That was the entry there on the breakdown of 34. So this is kind of a chase to me at this point, so I would personally leave that one alone. I do like the idea of shorting it just overall. I mean, the thing is destroyed, and it's very clearly having some issues getting over this resistance line. So if it does come back up and tries to reject that resistance line again, that's definitely a low-risk place where you could put your stop loss. So maybe short it at $34 with a stop over 36. The other way that you could play it is if it makes a higher low here and bounces then it could potentially be a long over 36, which would be sort of a longer term move because it's going to come over this big downtrend line. So not a super exciting idea right now, but it could turn into something. Skyline. So Skyline Medical, this is an interesting company because they are, as you can see, they had a big drop over here. And this stock has been reverse split a couple of times, and so these prices that you see where it looks like it used to be $100 and now it's $2.20, that's not accurate, right? This is a penny stock in disguise because it's been reverse split. So you have to keep that in mind. This is a penny stock, and there's a reason that it's a penny stock, and that is that they're probably never going to make any money, and eventually it's probably just going to go away. But what I did notice is in the news, on the 26th, the stockholders approved a proposal to increase the shares outstanding, which means that most likely there's another reverse split coming on this stock. So if we look back, I don't remember where the last one was. I think it was somewhere over here. They did a reverse split. My chart adjusts automatically to account for the reverse split, so I don't know exactly where it was. I think there's a couple websites actually, splithistory.com. that we can go and look it up. So they split on October 28th, 2016. So it was back here in this area somewhere. October 28th. Looks like it was right here. So you can see what happened after they reverse split. Right? It reverse split and then immediate face plant back down to zero. This is what happens with companies that have toxic financing and with companies that have just nothing really going for them. The stock goes to zero, they reverse split it to get the price back up and be able to stay listed on the exchange. It goes back to zero again, they reverse split it, goes back to zero again, and they'll keep doing this forever. Or until they get delisted. So what I'd be watching for is actually the reverse split. And once they announce the split, which they're most likely going to, that's why they want to increase the shares outstanding. Once they announce the reverse split, they're going to start diluting. They're going to start doing secondary offerings, trying to raise capital so that they can continue their operations. And once they start doing that, you're going to see the price go from wherever they reverse split it to straight back down to zero. So I would actually be short biased on this thing. Right now, I mean, the idea on the thread was to long it. It did have a little bit of volume expansion here, but I don't really see, there's no reason to ever long a stock like this, in my opinion, unless it has news or some kind of catalyst. So what I'd be watching for is once they announce that reverse split, I would be shorting the hell out of this thing as soon as they reverse split it. Just be careful, obviously, because once they reverse split it, it reduces the float, which means it's going to be a lot more volatile at that point. So you do have to obviously keep an eye on it. And, it's not the type of stock that you want to fight if you're holding a short position and it's going against you, because they can get pretty insane, as we saw with dry ships going from $4 to $120 in 4 days. So they can get pretty crazy. So there's Skyline. What was next? So we had Illumina, ESRX, THM, PRRE, skipping this one just because it's OTC. If you look at the rules for the thread, I can't do OTC just because I don't have access to OTC exchanges. These symbols I could not even find, and these ones I'm skipping just because there were no indications whether you meant long or short. However, Illumina, ESRX, THM, and NVIDIA also, I'm going to skip this one just because we've done this. It's sort of like AMD. We've done it a million times. So go back, look at the other videos, and I'm going to say pretty much the same thing that I would say right now on this one. So that's NVIDIA. Well, let's take a look at Illumina and then ESRX, and I think THM is a gold stock, so we've sort of already talked about that. Yeah, Tower Hill Mines. I don't remember if this is gold or silver. Yeah, so this is a Canadian gold company. So that's Tower Hill. Tower Hill, I like the strength in it over the last couple of days. And it did come right into this resistance here around 75 cents. That kind of stalled it out. So, you could see it consolidate as it has been for the last few days here. Once it breaks back above 73, 74 cents, as long as it has strong volume, I could see this push up to 86 to possibly $1 if it gets, some real volume behind it. But that would be it, right? I just look for a quick short-term move from, say, 75 cents to 85 cents, or possibly to 95 to $1 if it gets, real crazy. But that's going to also depend on gold. So I would watch JNUG, I would watch GDX, I would watch Nugget, and just watch what the other gold ETFs and other gold stocks are doing. So that's Tower Hill. Illumina, I do like this pattern. I believe this was a long. Yeah. Illumina. Illumina long. So they announced a deal with IBM Watson, I believe, back on the 10th. They're going to be working with IBM Watson to do something with cancer research. So it's got positive news. It's got a big name backing it, being IBM. So I like that. I'd just be watching to see what it does over all of these highs here. If you're looking for it as a long, we had a high there on the 17th of 162.05, 161.81, 161.49, 161.50, and then we're getting back up into the higher 161s as of most recently. So it looks like probably 162 is going to be the key. And then what I like to do is just look back at the highs on the daily. Next stop is probably going to be this high, which would be 165, and then 165.47, so call that 165.50, and then 167.10, and then you're into this big gap up to 185. So this does have a lot of potential. It just needs a little bit of volume to push it through that 162. So that's all I'd be watching for. Look, in the morning, look for excess volume that pushes it through 162, and then look for it to hold above 162. And that's what I'd be watching as sort of my indication that, okay, now we're ready to go. And I think this is the last one. ESRX. I think this was a short, actually. Yeah, ESRX short. So I'm going to guess that there's probably some fundamental reason that I'm missing that you want to short this. I don't personally see any exciting reason on the chart, unless you're talking about maybe a longer term short, which I could see based on the weekly, because it is sort of a head and shoulders type of thing going on here. And we have the neckline right about there. So under 65, I could see this being sort of a longer term short, but I don't actually like to short lows like that anyway. So I would be waiting for a bounce up into the 70s, at least like into the low to mid 70s, and short it there based on the weekly chart. But just to be totally honest, I don't see any reason to really short it. If anything, wait until it pops back up into the 70s, because right now you sort of missed it already. The short entry was over here at 71.25 or 72.50 or so. So if you can get back up into that area, or even just retest and reject 70, just because you need a tighter place to put your stop loss if you're using a short, you're going to be doing a short-term trade. If you're doing a long-term trade, you can afford to be a little bit more lenient. But with just a short-term trade where you want to gain in just a couple days, you can't really afford to give the thing a $5 a share stop loss, just because if it goes against you, then you're stuck in it for 2 months, and that's just a waste of time that you could be using that capital to do something else that would make you more money. So there you go, guys. There's this week's charting and technical analysis video. If you like the new format, feel free to comment, give me some feedback on it, and we will try to keep this shorter going forward. Also, I'm going to try to change up the titles a little bit and possibly throw in some other little tidbits of information like throughout the week, maybe do some short little terminology videos or something like that. So if you have any ideas, just post them in the comments. And if I did not get to one of your names here, one of your ideas that you really wanted to talk about, then feel free to post that in the comments as well with just your question about it, and I will look at that and we will do it via text. So thanks for tuning in, and I'll see you all next week.